All right, Wells Fargo just releasing its quarterly results. Let's get over to Leslie Picker. She's got the numbers on that.
Hey, Becky, good morning. On the top line, Wells Fargo reporting for the first quarter, $20.1 billion. That was down 3% year over year and missing analyst estimates. On the bottom line, $1.39 per share, which was up 16% year over year, although we're not comparing to estimates because there were a number of special items during the quarter. So we're going to sift through those before making that comparison. Net interest income, that was a miss as well and down 6% year over year, coming in at $11.5 billion. Non-interest income, this comprises things like investment banking fees, as well as brokerage commissions and advisory fees. That came in at about $8.7 billion in the quarter, and that was stable. In terms of provision for credit losses, $932 million, slightly better than the street was expecting on that front. $1 billion of that was net charge-offs, which actually declined quarter over quarter and year over year. So somewhat of a healthier signal, at least in terms of Q1 for that part of the book. I want to read to you a quote from CEO Charlie Scharf that's in the release here because I think it's pretty timely. He says, quote, "We support the administration's willingness to look at barriers to free trade for the United States, though there are certainly risks associated with such significant actions. Timely resolution, which benefits the U.S., would be good for business, consumers, and the markets. We expect continued volatility and uncertainty and are prepared for a slower economic environment in 2025, but the actual outcome will be dependent on the results and timing of the policy changes." Currently, the stock slightly higher this morning, about 1/4 percentage point. I'll send it back to you.
So this is Wells Fargo on the monthly chart. And you can see that you have monthly buyers at about $15 lower. And that level was set up based on this rallying price. One basic candle, rally out, price takes out, pivot high, pulls back, dips his toes at the top of the zone before moving higher, making new all-time highs. But since then, price has pulled back roughly 23%, and it actually pulled back into a weekly buy level, weekly buyers level. This was down at $64. Now, a couple things to note about this price action. Let's zoom in. Rally, base, and then the rally out. Now, this wick, which extends to the bottom of the zone, implies that the real buyers are lower. There was a reason why price wicked down, stopped here, and then pushed higher. There's buyers, the real buyers are here. All right, so what happens as price pushes down? We get a close. And this is why I had this particular setup. Entry near the bottom of that zone, stop just to give you some coverage. However, had you set and forget, you would have been stopped out. Because the markets were crashing the last couple of weeks, you don't go long blindly. You need some type of confirmation. And that's where you go to the daily chart. And even that's not enough. If you want a type of sniper entry, take it to 4-hour chart. It's not clear. 2-hour chart, okay. Now here's what you can do. And I call this a couple things to note. You have a W pattern. You have you want to call it a triple bottom, inverse head and shoulders, or for you ICT traders out there, the first pivot high, or the last pivot high, is that pivot high right here. Price pulls back. You wanted to take that out first. I'm going to take this, move this over a little bit. All right. So now you have a fair value gap. And this candle here, you never really got any candle closes above, so you don't take this trade blindly. You can do an equilibrium. You can get long here, put a stop below there, or I would prefer to have put the stop below here. All right, so your entry is at 63.27. You're taking about a $5 risk. Let's zoom out to the daily chart. At a minimum, you're looking for a price to close that gap at $70.50. That would be good for roughly a 1-to-1. However, if you think the markets have bottomed and you think liquidity is going to flood the markets in the coming months into the second half of the year, well, then you target this rally, basing candle, and then the drop. And that would be your monthly sellers level. We'll say at $79. And that would be good for target just below that. Good for a risk to reward ratio of 2.421.